An off-market deal feed is an automated pipeline of pre-vetted property deals delivered directly into your CRM and sales platform. It combines AI-powered data aggregation, predictive scoring, skip-trace seller contact information, and behavioral signals from public records to surface motivated sellers before they list on the MLS. You get access to distressed properties, estate situations, and expired listings, the high-conversion deal types, without the public competition that crushes margins on standard listings. The feed updates continuously and feeds directly into your workflow, so you're not manually hunting through spreadsheets or waiting on broker relationships. It's the inverse of the MLS. Instead of waiting for deals to go public, the system brings them to you, pre-filtered and action-ready. For decades, real estate operated on a simple model. Brokers list on MLS, agents preview, offers happen, deals close. Today, that model is breaking. Nearly 40% of high-end property transactions now happen off-market, away from public portals like Zillow and the multiple listing service Own Luxury Homes 2026. Why? Because motivated sellers, people facing foreclosure, probate, divorce, or relocation, don't want the market to know. Public listings trigger inspection requests, appraisals, and negotiations that slow things down. Off-market deals move faster, with less scrutiny, and often at better prices. For investors, this is gold. You avoid competing with dozens of buyers on the same property. You reach motivated sellers before they're desperate. Expired listings alone convert at a 44% list rate and 20.7% sold rate, the highest conversion of any lead source in real estate. Deal Machine OS 2026. In 2026, as the MLS became more saturated and more investors chased the same public listings, off-market deals became the baseline for serious professionals. RaySimpli 2026. An off-market deal feed automates this entirely. Instead of networking for weeks to hear about one deal, you get a stream of qualified opportunities flowing into your CRM every single day. Under the hood, an off-market deal feed works through 3 layers: data aggregation, predictive scoring, and automation. First, the system ingests public records, property transfers, deed filings, probate records, tax assessments, code violations, HOA complaints from county databases across your target markets. This happens automatically and continuously. Second, AI models scan for behavioral signals that predict distress or motivation. A property with a recent transfer at a low price, plus a code violation filed the same month, plus a mortgage in default status, that's a signal. A homeowner over 65 with a recent probate filing, another signal. Goliath Data surfaces patterns like these in real time, scoring every property in your market. Third, the system skip traces the owner, pulling phone, email, and mailing address from hundreds of data sources and feeds the lead directly into your CRM with a confidence score. You don't hunt. The data comes to you, pre-filtered. DealPath Connect, the institutional platform, provides approximately 65% of institutional listings, both on and off market, accessible via direct feed into buyer pipelines, representing nearly 19,000 deals created and $930 billion in aggregate value, with 60% plus engagement rates on listings. DealPath 2026. That's nearly double the response rate of cold email. The tools available today allow investors to spot signals earlier, automate outreach, and scale operations in ways that weren't possible just a few years ago. Goliath Data 2026. What used to take a broker 3 months to uncover now surfaces in 72 hours. Step 1. Choose your data source. Select a platform that aggregates public records, behavioral signals, and skip-traced contact data in your target markets. Tools like DealPath, RaySimpli, and Goliath Data all build automated feeds with different specializations: commercial institutional deals, residential wholesaling, or mixed-use portfolios. You need a platform that pulls deed records, tax assessments, code violations, and probate filings automatically, then scores them. Don't manually pull spreadsheets. Automation is the whole point. Step 2. Define your deal criteria. Tell the system what you actually buy. Are you looking for properties under $100K in after-repair value? Probate deals only? Expired listings in specific zip codes? Properties with code violations but otherwise solid bones? The tighter your criteria, the fewer false positives you waste time on. Resimpli lets you filter by property type, condition flags, owner characteristics, and equity position. Set this once and let it filter every single lead automatically. Step 3. Connect to your CRM. Most modern deal feeds integrate directly with your CRM, Pipedrive, HubSpot, Salesforce, or specialized real estate platforms. When a lead scores above your threshold, it lands in your pipeline automatically with contact data, property details, and the reason it scored. This means no manual data entry. The lead is already in your system, ready to call or mail. New CRM functionality enables professionals to systematize off-market deal sourcing and analyze relationships with brokers and capital partners, unlocking a more complete data-first view of relationship-driven deal flow. DealPath 2026. Step 4. Set up outreach automation. Most platforms include skip tracing, mail merge, and automated email or SMS templates. Send a personalized letter within 48 hours of the property scoring. Or set up a phone dialer to ring the owner. The faster you contact a motivated seller after they hit your radar, the better your odds. Some platforms like Resimpli combine list building, skip tracing, CRM, automations, AI follow-up, and full marketing tools inside one platform, so everything flows without toggling between apps. Step 5. Review, call, and close. Review the top scoring deals daily. Call the most motivated sellers first, those with the highest distress signals. Track your conversion rate by lead source so you can optimize your filter criteria over time. The point is speed and accuracy. You're not guessing anymore. You're moving on verified signals. Here's how one Texas wholesaler used an off-market deal feed to scale from 4 deals a month to 12. The investor, based in Dallas, had been cold calling absentee owners and farming expired listings for 2 years. The process was manual. Spend Saturdays pulling property records, create lists, skip trace by hand, call 200 owners to get 8 conversations. It was slow and expensive. In Q2 2026, the investor set up Goliath data with specific filters. Single-family homes, 50K to 150K after repair value, in Dallas County and surrounding markets, with recent probate filings or code violations filed in the past 90 days. The system automatically pulled properties matching those criteria, about 35 to 40 leads per week, and scored each one based on equity position, time on market signals, and behavioral patterns. Each lead landed in the investor's Pipedrive CRM with skip-traced phone and mailing address. The investor's team set up mail automation, personalized letter hitting the owner's mailbox within 48 hours of the property scoring. Of the 150 leads per month, 15 to 20 responded to mail. Of those, 8 to 12 said yes to an in-person walkthrough. Of those 8 to 12 meetings, the investor closed 2 to 3 deals at higher margins than they'd ever seen from cold call farming. Why? Because the system was finding truly motivated sellers, people in probate or facing code enforcement, before they hired a broker or listed on the MLS. The quality was higher, the competition was zero, and the closing percentage jumped from 2% to 12%. Cost per deal dropped from $1,200 in labor and marketing to $280. The investor went from 12 deals a year to 36 in the same calendar time, using the same team, because the lead quality was so much higher. Mistake 1. Trusting manual lists. Many investors still download a probate list or expired listing export from a broker website and think they have a deal feed. They don't. A static list is 2 weeks old before you download it. By the time you call, the property already has a contract or the seller hired an agent. A real feed is live and updates daily. It's the difference between hunting a frozen lake and fishing in a river. Don't download and import spreadsheets. Use a platform that ingests records every single day. Mistake 2. Loose deal criteria. If you tell the system yes to everything, you get flooded with trash leads. Probate deals and foreclosures are both distressed, but they play differently. One needs a quick cash close, the other needs a 3-month timeline. If you're a fix and flip operator, you're wasting time on deals in areas where you can't finance construction. Tighten your criteria to exactly what you buy, where you buy it, and how much equity you need. The platform is only as good as your filters. Mistake 3. Slow outreach. If a property scores high in your system, it probably scored high in someone else's system too. The fastest investor wins. If you wait 3 weeks to call, someone else closed it. Your outreach needs to be automatic and fast. Mail within 48 hours. Call within 24. The platforms handle this. Set up automation so it happens without you thinking about it. Mistake 4. No CRM integration. If your deal feed sits in a separate platform and you have to copy data into your CRM, you've broken the whole purpose. Get a feed that lands directly in your pipeline with all contact and property data pre-populated. This cuts manual work and speeds up follow-up. Integration is non-negotiable. The rule is simple. Off-market deal feeds work only if you automate the entire flow, from data ingestion to outreach to CRM tracking. Manual steps kill momentum. The investors winning in 2026 are the ones who let the system do the hunting and spend their time talking to sellers and closing deals. Speed and automation beat hustle every single time. Subscribe for more real estate technology breakdowns.